Hello and welcome to Pro Trader Strategies Market Commentary. My name's Eric Wilkinson, and yes, you may recognize me as the Wolfman. I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. And remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data. Remember, yesterday we had the FOMC, and that is what determines our interest rates. Well, they left those interest rates unchanged. One of the things we saw come out of that was the voting process and who voted for what. About half of the governors voted for an ease, believe it or not. Only one voted for a rate hike, which I think that guy must be out of his friggin' mind. And the rest voted for leaving rates unchanged. So they left the rates unchanged, but did remove some of the wording in there to leave people to believe that they might lower interest rates in 2019, but that is data dependent. Now, I've talked about this here in the daily market commentaries almost till I'm blue in the face. I haven't seen us really being at a point where we need to lower interest rates here in the United States. If we talk about the economic data that came out today, we can look over at Great Britain, and European region has been the one that has shown kinks in the armor, if you will, where they look like some of the areas may be looking at a recession. But Great Britain had their monetary policy leave their rates unchanged at 0.75 as well, and that happened overnight. Great Britain retail sales came in line with expectations at negative 0.5%. And then basically we're moving back over here to the United States. We got Philly Fed coming in at 0.3, expected to be 10.6. Now, we also got the Empire State Manufacturing earlier on in the week, and if you remember, that was a huge miss. So we are actually starting to see some of these manufacturing indexes come in lower, much lower than expected. Although those are not the headline numbers, the big numbers to look for, it will give us a little bit of insight as to what the economic picture is going forward, and those Fed manufacturing numbers not looking too great. And then we look at ADP, non-farm payroll change came in at what was it, ADP? 16,000, negative 16,000, which was kind of in line with expectations there. Consumer confidence, negative 7, in line with expectations. Natural gas storage is a build of 115 billion cubic feet, expected to be at 106 billion cubic feet. And that's it for the day. For the economic picture anyway, let's get over to the overall equities. Everything's moving higher, so everybody must be happy except for me, because my position is not looking too great, at least as of this morning with this rally we were having across the board. We got crude oil. I have nothing in crude oil, but it is breaking out of the area that I thought we were going to remain in, at least hoping to remain in, just because it will help the overall economy. With that velocity of money, we can spend money elsewhere. That's a good thing. So it looks like it's time to fill up your tanks today before this increase hits the pumps. I should probably tell my wife, but this massive rally we were talking about, this being a resistance area at 55, we've broken above that. I thought we would stay between 50 and 55. I talked about this yesterday because it's right there around the point of control. We've snapped to the upside. I don't think we're going to get into the 60s up here. I think this $58 is going to be a big resistance area. So keep that in mind if you are playing crude oil. I think that we're going to try and peel up there. But, you know, if the economy is not doing well, not gold, but crude oil cannot do that well. But while we're talking about it, let's talk about gold futures. I'm going to be looking to cover this probably pretty soon. As you can see, I have short GDXJ, which is the junior gold miners. It is associated to gold futures. We got gold futures up almost $40 today. I did not see this coming with this big rally coming up to test 1400. As you can see, that's going to be more of a psychological level. We don't really have anything in there for the Fibonacci. Even if I did this Fibonacci extensions, it would be much higher than this most likely, but we're going to see $1,400 act as that resistance area, and it's going to be a psychological resistance as we approach that. Again, I didn't think we were going to be able to break through this area here, but that was a massive move to the upside. I'm going to be playing my GDXJ very close to the vest and looking to pull this because we got a big pop today, which kind of put it above where I was looking to get out, but it's such a gap, and I'll show you a chart of it here in a minute, that I'm going to kind of ride this out just a little bit longer here to see how this pans out with overall markets. I think we might actually see them come back. Everything in my portfolio I'm ready to cover if some of these technical things don't go my way today. So, you know, you can follow me on Twitter. With bonds, they were up a point earlier this morning. As you can see, 156.17, approaching this Fibonacci extension here as well. Again, this market moving higher based on the dovishness we saw from the FOMC yesterday, and a lot of people are thinking we're going to be lowering interest rates relatively soon. VIX moving higher today, despite the fact that we're seeing a major move higher in the equities. As you can see, we got the Dow Jones Industrial Average up 170 or 150 points here on the day, although it is on the lows of the day. You can see we opened up, rallied very hard, pretty much trying to print some of the overnight highs that we saw in some of the other indexes. Remember, I talk about the day session wants to print those within the overnight highs in the day session. They try and get that printed out. So we got the Dow Jones popping higher, although we are coming back. But this is what I was talking about. If we finish the day here, as you can see, we've got basically a shooting star doji like that, just out in the middle of nowhere. And when you get something like that, and we get a confirmation tomorrow to the downside, that's going to look very good. But we've got this gap to the upside that usually has a tendency like it's blowing off steam, and we popped up there. So we're seeing some weakness heading into the later parts of the day. That's another reason why we're seeing VIX spike as well. Let's go over to the NASDAQ. You can see as well that NASDAQ rallied quite nicely, but back below this 78 Fibonacci here, you can see that's going to be the thing that we're going to be keeping an eye on, is this 77.65, let's call it. Settlement above that is going to be pretty bullish, and it's going to want to look to try and print some things that were printed in the overnight session. If we take this market off, you can see this 78.79 area is the overnight high. That's going to be looked to be printed. Now, we had one of those in the E-mini S&Ps that got printed. As you can see here, if we pull up the E-mini S&Ps, 2964 and a half is the high. But what we were seeing before was this was the high right here, which was 2961. Remember, I said we're going to need to want to print that in the day session. So if we take this chart off, you can see that that print is higher today than it was before, back on 5/1. So we printed that high within the day session. But here's the other side of the coin, is we can see that the high of the day session is 2961.75, right? Well, we put that overnight session back in there, 2964. Now we've printed another high inside of the overnight session. So again, we are going to have the market wanting to print this high now inside the day session. Like I said, that happened overnight. We've since seen weakness. It tried to go up there and rally right off the bat, but the weakness started coming in and we're starting to roll over. So this is another thing. If the E-mini S&Ps finish above this Fibonacci here and we settle up in and around near the highs or above 2956, that's going to be an out for me. I'm going to be looking to cover just about my entire portfolio if we see some of these markets, these equities rally at the end of the day and finish near the high. That's where I'm going to be looking to get out. But if we start selling off and finish near the lows, then I believe that we're going to roll back over to that point of control again and start, staying with my market assumption where we're going to kind of settle down. Yes, we should see these kind of spikes, but the idea is we're not going to trade in this super tight range all the time. We're going to see it break out a little bit and then come back and break a little bit lower and come back. That's the way I see this market setting up right now until we get a little bit more clarity as to what's going on in the economy and what the Fed is looking to do. Right now, like I said, it is all across the board inside that Fed group, where some of them think that there's an ease, some of them think that we need to stay neutral, and some of them think that we need to raise rates. So it's across the board all over the place, depending on what area of the country, I guess, you're talking to a Fed governor in, because they're talking what their local economies are seeing, and they're voting on what they think is best for their local areas. So that to me says that across the board, across the United States, it's pretty inconsistent. All right, let's take a look at the E-mini S&Ps. As you can see, this print was just in the overnight session, and as we came into the day session, we talk about this. Overnight inventory got very long, right? You can see overnight inventory is long here, and then during the day session, we opened up and it comes back down. They're basically trying to flush out all these longs. Now, if the market continues down, I'm going to stay in. But if we get this little bit of a bounce and go towards the highs, then something like this, where we try and flush out the overnight inventory and start rallying towards the end of the day and finish above this Fibonacci and or near the highs of the day, I'm going to be looking to pull the ripcord on pretty much my whole portfolio. But I believe that this is just blowing off steam to the upside, and we might get a little bit of a correction going forward. But today is going to be a key day for me and what I'm going to be doing in my portfolio. So follow me on Twitter. I'll just say I'm flattening out or whatever there. But one of the things I wanted to look at was GDXJ. This is what I was talking about. We got this blast off. It doesn't have the overnight stuff like we saw with GLD, right? Or sorry, gold futures at the CME. That has overnight. So we got that big rally overnight. This is just a day session because it is an ETF. Remember, these stocks here are, there's all the junior gold miners, not the major ones, but the junior gold miners. And we got this blast off to the upside today. But to me, that usually indicates a top, right? So I think it looks like a top. Tomorrow, we get any kind of confirmation to the downside, so a doji like that would be great for me. That would be a good thing, because that would be then a confirmation of a top is what I'd be looking for in that trade. All right, that's about it. Everything else not working out real great, but things are starting to come back a little bit for me, so I'm going to hold on to these things a little bit longer. I think that the market feels like it's just blowing off to the upside. People were really talking bullish yesterday because the Fed wants to lower interest rate, or may want to lower interest rates, and we really got that rally. So I'm kind of fading that. I've talked about it. 2019, I don't think we're going to see it here in the United States, because we're not seeing it show up in our major economic data points. Some of these ones, like I said, with the Fed manufacturing numbers, those are showing some kinks in the armor, but across the board, it doesn't look all too terrible at this point, I don't think. So I'm going to stick with my market assumption unless the technical setup against me, in a sense. So I'm going to be looking to get out if that happens. And that's about it. That's all I got for you guys. Other than today's going to be a great webinar where we talk about market assumptions, whether if you think that the market is going to continue to rally higher. Probably should have had a green one there, but if you think the market's going to rally higher, we come up with a strategy for that assumption. All right, we're going to talk about the environment around like XYZ, what the implied volatility is doing, and what we have as a directional assumption. All of these key points should lead us to the correct option strategy that has the highest probability of success. And I'll show you how to go through those steps through my rules in order to set up these strategies appropriately in today's webinar. So check that out. Also, give us a like on our Facebook page, because then you can get these videos a little bit quicker than what we used to be able to get these out to you. All right, that's it. That's all I got. If you can't take that, take it easy.